Okay, team Apex Trades here. Hope you're all well. We've got an absolute load of stuff to get over on this one. So, quick introduction followed by the session. So, let's talk about the first thing we're going to cover. This is the crab harmonic pattern, looking for a 1.618. Really bearish pattern, and which we've been monitoring for well, actually since 5th of November 2022, which is playing out quite nicely. We're going to look at where the ultimate target for this would be before a move to the downside, if of course this move to the downside isn't already upon us. Next, we're going to cover some high term time frames. You know, we like to cover the high term time frames, specifically making sure we know where the weekly, dailies and monthlies are located for price reversal. Any kind of stickiness on the charts, we know we like to cover them. Secondly, or thirdly, we're going to cover an absolutely explosive time frame here. This is the Fibonacci time extension tool. Each time it's covered a really important reversal in the charts, and then when will it ultimately come to fruition? Well, it's actually on the 10th of February, so we shall cover that. Next, we want to cover kind of more localized time frames, so we'll be shooting right into this parallel channel and getting a sense on where we are with things like that. Then we want to cover the liquidity zone, so where is the key liquidity and how do we spot that? Then we want to cover volume zones. I absolutely love these things. Again, these are a favorite of mine, and if you follow my channel for any kind of time frame, you will know that these are something I use often in my trading. And then lastly, we want to cover pivot points, so getting a sense on where the weekly and monthly pivots are for the range. And then we'll finish off maybe on some good updates on Trading Light. I think I always like to kind of get a sense on what's going on with things like open interest and CVD divergence. Is money coming into the market? Is money leaving the market? Are we seeing anything that's given us reason to I guess take pause, at least on the shorter time frames? So that being said, lots to cover. We'll also try and maybe just finish off with some ideas on what the week ahead looks like with the likes of the FOMC. We've got Apple earnings as well as Amazon as well, so there's going to be lots and lots of stuff to cover on this one. Without further ado, let's get kicking. But before we do kick into the intro, please, if you just get a chance, if you like what I'm doing here, you like the content, drop a like, you know, subscribe, all that kind of good stuff. It really helps me out, helps the channel out, and yeah, really appreciate it. So that being said, let's get straight into it, team. Okay, so starting straight in with the crab harmonic. What is this crab harmonic? It's, well, you can get bullish versions of the crab harmonic and you can get bearish versions of the crab harmonic. But if you kind of look, it looks a little bit like a crab. In this one, it's an inverted crab. What you're looking for is the value. So this is 618, kind of close to that value, but this here between your X and D pattern, you're looking for that 618, and that is the culmination of where it peaks. Now the peak on this, which I think shows some real interesting kind of price points, is 25,167. If I pull up my liquidity here just as a point, it's really interesting on where that actually falls. So we've got the liquidity zone right here on this high, which we've not yet came up. We've come up to this liquidity zone here, as you can see, but we've not taken this liquidity. So if we do come up, this is a very bearish pattern, and there's every reason why this could be the ultimate reversal zone. So be mindful on how you trade, but have this in mind. It's a key reversal zone, crab harmonic pattern. Look it up on YouTube or Google or anything if you want to learn more about that, but just something to keep in mind. Now, next thing I want to cover is high term time frames. We have a new weekly level here. Let's just dive into the weekly so we can see that weekly level. You can see we're picking it up here, which is at 24,290. Again, right now we've seen some nice sell-off, which would give you indication to think, well, now we're starting to move down. But as I say, we've got the FOMC meeting. We've also got consumer confidence later on today. So again, these are things where we're going to get a lot of flip-flop action, and there's no reason why we can't, you know, even if the news is bearish, like 50 basis points, we could flip up, claim liquidity, finish off that crab harmonic, and then come back to the downside. So always like to understand where we are with kind of zones. So got our weekly zone here at the 24,290. We have a brand new daily level, which was printed yesterday, which was here, which is at that 22,830. So that was the where we finished the daily yesterday, and we also have one up at 23,737. So right now that's a pretty significant range. In between that range we've got the monthly, and you can see a lot of wiki action right at that monthly, usually a significant area, as you can imagine. So again, if you've not yet done, map out your key high term timeframes. Next we are going to explore an explosive pattern, right? So this is the Fibonacci time extension tool. So how do we do the Fibonacci extension tool? Well, we take the low to the high, back down to the swing low. So it's that I'm taking this pattern here, and then it will chart out what my so your 1-to-1, your 1.618, your 2.618, so on and so forth. And what you tend to find is, you know, when we obey a Fibonacci time extension frame, well, it's pretty solid. So let's just have a look at this. Where are we? So that is the Fibonacci extension time, right? As you can see, started with the low, went to the high, finished the first bar, which is your 0 point on bar 1. Now you can see your first point, yeah, which is here, which is I've drew the arrow, was the same day that we had a couple of little sell-offs, two days of sell-offs, but you wouldn't signify if you take this area here, you would not signify that's an upward trend. We have a little bit of a pullback, but there was a pullback here as well. So without knowing it, you would just think it was, you know, continuing to the upside. But no, alas, we had the FTX fallout, and the Fibonacci extension tool picked it to the absolute day. Now, next one, you can see here we had a 1,000 basis point move. You can see if we take this point here, which it called it on, down to say here, it was actually 2,000. It was actually 2,000. So if you take the low, 2,176 that it picked up. Then of course the next, so that was the 618. Then the 1-to-1 we picked up here, which we can say this. If we went long at this point, well, when do you get out of it? It just picked up that absolute massive bull run, didn't it? So again, now here's the really interesting point. The 1.618 is on the 10th of February. So again, keep your eyes peeled on the charts for that day. I'm expecting fire. We have the 2-to-1 ratio of the fib extension on the 4th of March. So quite a lot later. But again, I'm keeping my eyes peeled firmly on the 10th of March for any kind of activity on what might occur. Okay, moving on. Let's get more into the shorter time frames now. Let's look at what's been happening. Let me get rid of that. Let's go into let's do the hour. Okay, let's whizzle in. Trying to keep these a lot shorter than my previous ones. Where we go, parallel channel. So it looks like, you know, Bitcoin continued its upward momentum. Now, if anyone's been watching me, you noticed that in my previous recording, I basically said I anticipate 23,800 and 23,900 as a really important point in which we should expect a reversal. Number one, because we were monitoring the volume. It was an ascending triangle, which had bullish implications, or it was actually a symmetrical triangle. It had bullish indications. I think it was. I'll actually map it out because I can see where it was. It was. Let me take the magnet tool off. It was here, so you could see. You know, we were in this position here. We was kind of in this position here, and then you could see we had a breakout. Maybe it's a little slightly bit up. We had this breakout here. Now, at the time, my channel was probably let me just move that there. It was more like here was my zone, because this was the original fake out. Yeah, so I didn't really have that kind of as the zone. It was this zone. But of course, once the zone breaks, what are you looking for? You're looking for a couple of things. You're looking for volume, most important. Are we getting a big break of volume? That would signify that actually there's weight behind this. We're going to come into trading light in a short while, but then I'm looking for CVD divergence. Are we getting bullish pressure, and is that in accordance with the price action? And then number three is open interest coming into the market, i.e. is new money coming into the market on the central exchange, to signify actually that this move to the upside has got a lot of pressure behind it. A couple of things really detracted me from it. Number one, it was of a weekend. I never trust volume on the weekend, predominantly because it's usually just retail traders. Nothing against that, but you have to kind of take that with a pinch of salt. That it's usually, if that's going to happen on a weekend, to not get too fragmented and crazy. So what we've done is we actually now created, you know, a new movement, and then we just had a great reversal. So catching that reversal, and then where do we ride it to? Well, bottom of the channel, hasn't it? Got to be the bottom of the channel. So you're just trading this range, and all you're doing is operating within this range until you find reason to break out. And again, when you're monitoring the top and bottom of these channels, you're looking for significant volume. You're looking for positive activity for your pressure from the CVD divergence, which is, so CVD is, where's the pressure? Is it bullish or is it bearish? And is that in relation to price action? If those key things are all in play, and we'll cover that in a second on Trading Light, then there's cause to get behind the move. But volume, again, is the other key thing, and we didn't see really any of that, which is why I didn't have any kind of confidence in the breakout. So for me, it was a fake out. Couple of the guys in the server covered the move and profited quite well. So again, if you're not yet in our server, maybe I'll just throw a quick promo in here. Okay, so after seeing that, maybe you should dive in. Right, so we've covered the parallel channel. So what are we thinking now? So look, right now, this kind of little small movement here looks like it's got a little bit of a pattern to it. If I go to the 15-minute, for me, right now, I can see, where are we? Small kind of Elliott wave. So we can kind of go 1, 2, impulsive wave 3, 4, 5, and then looks like what, a bit of an ABC. So this would be what I would term as a zigzag pattern ABC. So move in the adverse to the, so contra to the trend, but it's not a flat pattern because C has broke A, which is fine. And now, you know, whether we continue with another ABC or like a WXY pattern before another move to the downside, you know, you can maybe say this was 1, this is 2, you get another impulse 3, 4, and so on and so forth. But like me, all I'm going to be doing until we see significant volume is I'm just going to be trading the bottom of the zone. So I would look like this right now. If I wasn't in a trade, I would be looking for a long position somewhere around here. Where would my stop be? Well, you would have it relatively tight, maybe just below here, just to cover any kind of fake out. And where would I ride this to? Maybe the mean, only because of the time frame. However, I would maybe look at even going higher to the top. I think I would bring my stop loss to break even the moment we kind of come back into this above my zone here. You know, if, for example, consumer confidence comes out and it's positive, well, I would be looking for a short or a sell position somewhere around here. Again, nice stop loss. You know, just clearing maybe that 24,200 just as a way to kind of cover yourself. And again, I would ride it just the way back down. So they would be my trading ideas for today. I wouldn't be trading at any point here just because it's sign of weakness. We don't have anything other than, you know, we're neither here nor there. We're kind of just in the middle of no man's land. So I would stay out of a trade until such time that I see something gravitate towards the zone. Okay, that's the parallel channel. Let us look at the liquidity. So again, how do we define liquidity? Well, each of these data points are areas of the chart where you're probably going to find, if you've longed from this position, you're going to have all of the stop losses just all around here. So anyone who wants to come down here and capture these stop losses, well, there's a lot of liquidity in these zones. And again, we're going to have a little quick look at Trading Light in a short while, just to kind of convene on that. And the same to the upside. Actually, the liquidity zone here would be the highest point. And again, you're looking at this zone here just above for your liquidity, and then this one is again all the way along here. Actually, I'm on the 15 minutes, so I won't do that. That'll just be a little bit messy. Okay, let's get this off. So the next thing we want to cover, let's go back to the 2 hour actually, is our volume zones. What are the volume zones? Well, these are taken from the height of the move to the upside. So here, this point here, right the way down to this point here, we're covering most traded volume across this entire move to the upside. So the way you do that is if you minimize that there and you bring up, let me see. Let me just check what one it is. It's the visible range volume profile. You'll see that actually these lines, yeah, to the points and the peaks, all line up with significant areas. So you'll see this is the value area low, this is the value area high, we've got the point of control in the middle, and then all of these kind of peaks that cover the volume. These are where we get sticky in the chart and where we tend to find that price likes to go swing to and from a lot. So what I like to do is not so much have this on the chart per se, but to have the zones in a nice faded light kind of color, just so I can kind of spot them without them being too messy on the chart. So you can see I've colored my value area low here blue, I've colored my value area high blue at the top, and we've got our point of control here, but they are actually a zone. So if you zoom and go back into the 15-minute, you can see, you know, we tend to gravitate around these zones, and if we come too far away from them, we'll come back to them. So again, in terms of a buy or a sell opportunity, if we overlay our parallel channel, you can see, you know, we're right back into that mean area. So I'd be looking, maybe if we do come up to here, I would be a short or a sell position at this point, and then you're looking for, you know, TP down here, maybe bottom of the channel. However, if you want to push this a little bit further, your next zone is here, and that makes sense because you've got, you know, a lot of kind of well, what was previously resistance would now act as some level of support. So just keep your eyes mindful of that. And then lastly, I just want to cover some ideas on pivot points. So let's just look at where we are with the pivot points. Right now you can see, actually if we go to the top, right, you can see here the pivot point from last week. Actually, this is the weekly pivot point from last week. This is this week's pivot point. R1 was tagged to the absolute dollar. It slightly missed it just in the middle of the week, came back down, didn't quite come back down to the pivot, but then came just before the end of the week. You know, if you're looking for a zone to target, that's exactly where it went to, right at the R1 point there. Then what happened? So now we have a new set of pivot points. Well, you can see we came to the support zone, wicked down a few times. This is the bottom of our channel. If I just highlight our channel here, you can see, you know, we just underneath this channel. So again, right now, where would we anticipate the move to go? Well, we could maybe see it come down as low as this S2, which is, again, in that zone there. If I put my volume zones on, you can see, I didn't quite put that on, apologies. You know, you can see this zone here, just in the same kind of area as your S1 or your support one. Support 2, my bad. So just being mindful of that. What else do we want to cover? So let's just jump really quickly into trading light. Let's see what we can make of that. So as I say, last time when I looked at trading light, if memory serves, let me just double check. Where were we? Yeah, this is the area which I called on that previous video. It was that this zone and this zone would act almost as the top of this low, and where you would look. So it was the 23,800 and the 23,900. Actually, we came just shy of 24k. Literally, you know, just missed it by a few basis points. But you know, it wasn't a bad move, to be fair. If you'd got in and you give yourself a little bit of room with your leverage, so you wasn't crazily over leveraged. So let's just bring this into where we are. You know, you could see here. Let's see, as we approach now, we've got a couple of zones to be mindful of. Again, we've got liquidity built up at that 23 to, well, 260. Does that give us any significance in the chart? 22, what was that? 22, let me see how much it is actually. Yeah, that's only 600 Bitcoin. That's not really that much. What about below us? 391. We have 1.2k at 22,400. So let's have a little look at these zones. We've got 23,250. Let's see what that looks like on the chart. So 22,350. Let's just hop back over there. 22,350. Does that give us anything? And that's on 23,250. Not really. Let me just look at my zones. Back up towards the to the monthly high, to the monthly time frame. So just keep, that's 22,350. Obviously the monthly's at 23,290. What else do we have? Let's see. In the parallel channel. No, it's not. It's just beyond the mean, so it's not too much there. We don't have any liquidity in that area per se. Volume zone, yeah, it's right again. Right now, volume area. It's just in this area. I always try to find confluence as to why that specific area alone. But again, there's only like 600 Bitcoin in the grand scheme of things. That's not an awful lot of liquidity. You want to be looking for, you know, post 1k, 1.5k for any kinds of potential absorption, let's just say, in terms of a retracement. Let's just go back to Trading Light real quick and let's see what we can see. So again, the lower value we are looking at is, we have 1.2k at the 22,400. Now I do believe that is just at the bottom of the zone, or quite close to the zone, or the bottom of that channel. So let's just see that 22,400. We're going to fade back in there. Okay, and let's see what we can see. So 22,400. Right. Let's get back on my trading view. So 22,400. We're right here. Yeah, it's right at the bottom of the channel, isn't it? So again, you can see from our perspective here, we've got our zone here at that 22,400, bottom of the channel. We're going to see potentially some absorption. So again, going back to my previous trading ideas and plans, it would be a long order, and no reason to think anything different until such time, you know, that we see a lot of, you know, divergence of certain indicators coming into play. So, you know, a buy or a long and or a buy position, you know, at this point, and just target the highs. Just keep it nice and simple. Doesn't have to be too crazy. You know, if you take a loss, then it is what it is. It's just, but your risk to reward ratio on this is a lot higher. So we will see once the FOMC meeting kicks in that it could be quite significant in terms of, you know, what even if it's bearish, you can see these moves that really flip-flop 500, 600, 800 basis points before the actual narrative plays out. So, you know, just be mindful of that. Back to Trading Light. So let's see. On Trading Light, again, what I'm going to be looking for is when we're approaching these zones, and this is the most significant thing, and for me, every trader needs to bury this skill into their head so they you know, understand it fully. You're looking at a few things. What is CVD? It's a marker for pressure, right? Is there more sell pressure or is there more buy pressure? This is essentially just how much pressure is into the system. So right now we are bearish. You can see the pressure is building to the downside, so the pressure is weighted towards downwards, right? That, however, isn't a true story, because what we see on the candles is market orders, right? So aggressive orders that come into the market. So I would say like this: if, for example, we can identify a trend on, let's say, CVD. So ultimately you can see that that is in a downtrend from this point, right? In that same breath, what I would say is from this same point, that was the top where it came in. Okay, we came down there, but right now I can see open interest coming into the market. So money is actually not leaving the market, but actually coming into the market. When I say into the market, into the central exchange, how does money come in? Well, buys, etc. How does money go out? Some sense it's liquidations, it's fees, and it's, you know, taking profit. And then what are we seeing on the price action at that same point, right? So here we're seeing price action go up. So I would say that this right now is a bullish indication, not a bearish indication. Why? Pressure to the downside from bears, so we're trying to push the price down. Money is coming into the market, but the price is continue to go up. This means there is bigger players, yeah, absorbing the pressure which are limit orders. Okay, so if you've got aggression coming into the market trying to aggressively sell as market orders, because that's effectively what CVD is, it's just looking purely at market orders. Usually if you've not got the pressure, or there's not enough traded volume, then a limit order, so a bigger player with huge pockets, let's just say, who's absorbing them, means that the price, can come up to a level, but then it's getting rejected, and eventually, well, it wouldn't be that way. It would actually be down here. So let's see where the absorption happens. It would be underneath, right? So this is the area where we'd be absorbing that pressure. Could be here. Could have been this zone. In fact, it was that zone. You can see this is where we absorbed it. Yeah, and then once it got absorbed, even though the pressure continues to the downside with market orders, price goes up. Why? Because the pressure here absorbed it. And what have we got there in terms of fee? Let me just take that off. Let's see. Interestingly enough, it wasn't an awful lot. What about in this zone? Probably even less. Yeah, 400, 500. So it wasn't a lot of pressure. I think right now as we're starting to approach, the FOMC and other data, it's probably getting a little bit nervy in terms of people not wanting to commit at this stage too much until things play out. So it's going to be interesting to see what we can see. And as I see things, I think December was a really bullish month. We had January really bullish, and so it's like, okay, that can't really be too helpful to the Fed. We've just seen Spain come in with higher inflation, not great. We've seen the effect of that yesterday, which for me was part and parcel of this sell-off here. This sell-off which occurred was pretty much straight after the news events came out that Spain came in a lot hotter than anticipated. Add to that to the fact that the Eurozone will probably follow suit. You start to see some of the Eurozone starting to look at higher inflation, and as a consequence of that, what do people do? They run for safe assets. They run for risk-off assets. They look for currency. That will have an effect on things like EDXY, and ultimately that might mean that things like Bitcoin and riskier assets may start to be a little bit less favoured. So you could see the start of that yesterday after the news came out. So it's going to be interesting to see how Powell reacts to that information. These things are often all intrinsically linked, but we shall see. Now, look, if you've got anything from this, as I say, hit like, subscribe, all that kind of good stuff. Okay, team, if you are looking for a central exchange to use, maybe you've getting a bit fed up with your own, or you want to find a new one, maybe consider using ByBit. It's the platform that I use myself, also many of the participants in our server in Apex Trades, and it's one that I'm pretty much familiar with. If you sign up with me, link is in the description, you will receive $50 as a welcome bonus, which is always nice. Why would you use ByBit? Well, number one, obviously in a world where exchanges seem to be falling down by the bit, one of the things I liked is they quite quickly jumped on the ability to prove their reserves, which is essentially a way in which they look at what's backing everything within their portfolio. So if you look at their portfolio, this is the Nansen dashboard. You can see majority of their tokens. So essentially you've got like 50% in USDT, we've got just over 20% in BTC. We've got a small percentage of 10% of their own native token, which is BIT, which is a utility token, and then we have around 10% in ETH. So actually, if you think about it, you've got 50, 60, 70, nearly 80% backed by really solid tokens, and an additional 4% in USDT. So I think if you're looking for a platform that's well backed, isn't just gonna buckle under the pressure of what something like FTX did as an example, then you should consider ByBit as a way to kind of get that through. Now, the other thing I like, in terms of platform functionality, it links nicely to TradingView, so it has all of the ability to map out, use the same kinds of indicators that you see on TradingView. You can set alerts, which allow, if an alert comes through, to be registered on ByBit. if you have certain levels or things like that you want to be able to put forward. It also allows hedge mode, so it means you can do a short and a long position at the same time. Why would you want to do that? Well, maybe if you're at a position where you want to lock in a specific value, maybe it's in a loss position and you want to be able to work that off. Hedge mode allows you to kind of counteract that by locking in that loss for a temporary amount of time until you find a new level that you want to reverse and turn. Of course, none of this is financial advice, but we do talk a little bit about how to manage trades in the server. So I would recommend ByBit. Again, it's one that majority of us use, and I like to see the confidence in a platform that comes out and explains exactly what they're going to do and demonstrates that transparency on their native token. So as I say, if you want to use my link, it's in the description. Helps you out, helps the channel out, and helps me out too, so really appreciate it. Sorry guys, just a quick pause. If you were enjoying the video, I just want to talk a little bit about the Apex Trades server. So the purpose, so this was built specifically for education and development. However, I do put myself out there by showing and demonstrating my own trades, how I trade, the levels that I like to get in and get out, and this is kind of backed up by the videos that I tend to put out there. By subscribing, what would you get? Well, obviously you'll be able to follow along with me if that's so what you wish to do. If you want to understand how to trade better, if you want to learn how to trade, a shed load of, I nearly said something different, but a shed loads of educational content. I do one-on-one sessions with individuals for Patreon traders. These are people who want to find out where they're kind of maybe going wrong, or maybe get some deeper level of understanding as a one-to-one basis rather than in a crowd. Oftentimes I found these very, very useful. We do some daily and weekly technical analysis, specifically on BTC. We have lots of different platforms throughout the team. So we've got HighBlock and Bookmap. Bookmap is a tool you'll have seen often, which shows where the live orders flow and are demonstrated within server. You can see these actually in these channels here. So we'll have, let's see, we have like Bookmap. So we'll be showing on a regular basis where the key levels are residing and where we're kind of looking at. And then we have HighBlock, which is a fantastic tool. HighBlock actually shows you where big liquidation events are going to occur. And good friend of mine, Moonrise, who is one of our moderators, kind of shows and implements that on the daily. So again, if it's something you want to just fantastic community, get involved with, speak to people all in a similar kind of framework and mentality of yourself, all trying to get better at trading, then I suggest you consider maybe coming over and joining our server. Link is in the description, and I will hopefully see you guys there.